Good day, traders. Mindset Reset. Today we're talking about day 3 parabolics, day 3 trend trades on Free Cash Wednesdays. Still some confusion, some hesitation by traders, and some lack of understanding by other traders. So just coming back to reviewing some very simple concepts about what I'm looking for on Free Cash Wednesday. Monday, Tuesday, Wednesday, opening range, initial balance. So I really need to hammer this home. Monday opening range is our initial high and low for the new week. So people have all the other, they're tracking markets and their commitments to traders and, all these other things. But when the week starts, Monday's high low is our new high and low of the week. Day 2 is our initial balance, Tuesday. And often we can break one side, break another, pull back inside, and we close inside. And we talked about the terms in balance and out of balance. So when a market breaks out and closes broken out, according to Dalton Market Profile, it's closing out of balance. We've reviewed this subject several times. When it closes out of balance, it increases the possibility of being a market that can continue to stay out of balance, meaning it can continue to trend, or it can reject and reverse and potentially be an opportunity when it recoils back inside of that range. So a day that closes out of balance is a day 1 breakout, especially if it's out of the opening range. And it potentially now is an opportunity either for a continuation trade. So if it's a continuation trade, we will have trend trades on day 3, possibly. Or we've already broken out. We could have day 1 longs in the market, and the market may reverse. And we have an opening range failed breakout now where trap volume can be outside of a week, and we may get a parabolic opportunity on Free Cash Wednesday targeting the other side. Why would they target the other side if the parabolic setup presents? Because where is the money? Remember, we've broken out of one side of the range. We've triggered breakout traders in the market. Other time frame traders are in the markets, and they have their stops placed above or below that initial opening range or initial balance. Could be an inside day, one of those types of scenarios. So I've still got traders saying, yeah, but where do you get in? Or how do you know when to get in? And so we've got our timing windows on 3 sessions, a 3-day, 3 session. And today we saw several 3-level opportunities, pump and dumps and dump and pumps. So as I said to one trader, he said, sometimes you say it's 25, sometimes 50. No. 3 levels is 75 pips. That's the smallest 3 levels of rise or fall that we are going to have. Now, we've had other situations where the low, for example, we could have the low of a bar below 25, the low of a range below 25, and the high of a range above 75. But that's 3 boxes. So we have a lower box, a middle box, and an upper box. So conceptualize this. When they roll over, if they're pumping and dumping, they're going to blow through the level. But it's still 3 levels from where the low of that range before it pumped up to the top of that range involved 3 boxes. Now on indexes and gold, we can get 3 levels that are 75 pips, and then we can go 150, 3 levels of 50, oil, 50, 50, and 50. And in some cases with index, we might have 300. It may go 100, 100, and go 50 to 75 in that last one before rolling over or before dumping and pumping. Now, think and understand, we're looking for setups. We're not trying to sort of guess a move. So today, for example, on the indexes, they already started to break down prior to the New York Open, but they were coiled before the New York Open, coiled to explode through the low of the previous day. So one trader said, yeah, but I'm selling at the low of the day. You have to understand what the purpose of that setup is. Somebody's counter trended, somebody's in the money, or they've got stops placed. They're trying to buy the low if it's a pump and dump, or they've sold the high if it's a dump and pump. If it's a parabolic setup, they're exploding because they've got traders trapped in the wrong direction, and they're going to clean out the money. They're going to hit the stops, and they may do a range expansion as well, because that first initial failed breakout or that 3 levels of drop or 3 pushes is the trapping traders down low before an explosive reversal. Maybe we'll get a first green day, or we'll get an inside day and a continuation on Friday, whatever that may be. But hunting the best parabolic setups is the key. So again, I posted a few examples of failed breakouts. So we had oil, we had euro yen, NASDAQ was 3 levels of rise, pump and dump right at the New York Open, vertical through the low. DJ 30, vertical through the low. S&P not quite, it was already sort of creeping down and reversed at the low of the week. Gold, so again, remember the two types. Reversal trades, trend trades. Day 3 can blow off in the direction of the trend. So on a day 3 parabolic, if it's a creeping trend or we've gone 3 levels and the market's dropping down and pumping into it, into the open, it's about to go vertical through the low of the day. It had not triggered any other levels. It did not go back to where the level broke out yesterday on gold. It didn't take out the current high or low of the day. And so when that happens, the first level that it triggers is the low of the previous day, which is why at the breakdown, the collapse, it went 50 pips right at the open, hit the low of the day, and went 25 roughly past that, and then exploded back in, because now they also have breakout traders triggered into the market who are shorting it down at the low of the day, the low of the week, and then exploded back up, and then crept down again into the New York Open and went vertical through the low of the day. That blow off at the New York Open then proceeded to put a low in place before the market slowly started to auction back up in that third hour after just heading into Powell's press conference. So really reinforce the simplicity of the understanding of reversal trades or parabolic. So traders are struggling because they've got this idea that all they're trying to do constantly is counter trend. And so you lose the perspective of what the setup is. So when do you get in? It depends on the setup. So on NASDAQ, you could have got in the first hour. You could have got in at the New York Open. On gold, it was in right off the start. It was already rolling over. They'd already dropped it down in London and pumped it up in that lower middle 25 pip box. So again, I reinforce, if you're not sure, don't guess and don't, sit there scratching your head. You have to think timings, levels, behavior of price. So if you missed it in that first hour, or you didn't take it, 9:30 was an opportunity. You still can't counter trend. So again, on a parabolic opportunity, we're not looking to counter trend a market that's collapsing through the low. Now later, after it breaks out, we had the low of the month. I put that level on the community post. The low of the month was sitting there. Again, 1 hour, 2 hours, third hour Powell. And so traders are still saying to me, oh, I'm going to get the third hour, catch the move back up. I'm not looking to catch moves. I'm looking for parabolic setups. The euro yen was textbook. Dump and pump. It did not take out the high of the week. Remember, we've got traders trapped at the breakout of yesterday. So traders still aren't understanding that there's trapped traders in the wrong direction. That's the nature of the parabolic setup. There's trapped traders, whether they're trapped on day 2 breakouts, counter trending on NASDAQ and on gold for a vertical explosive move, which is why they go 25 to 50 pips through those levels, maybe more. On gold and NASDAQ, they went well below those levels. So you're caught into this thing where you're looking at the day, but you've actually lost perspective of the big picture. You've got other time frame traders in the market. Other time frame traders are driving these moves. So you have to think. Again, I keep reinforcing the concept of thinking, not guessing, not which 5-minute bar. Think about the big picture. Where are they going? Where are they going? You have to think. So free cash Friday, free cash Wednesday, parabolic reversals, parabolic trend trades, because somebody's caught on those other time frames, whether it's a failed breakout for it's a trend trade on the day, but it's a failed breakout at the low of the week. Low of the week, high of the week. But we're into that day. So you have to be thinking about the type of setup that you're trading. So step back and understand when you've got other time frame traders trapped. Failed breakout starts our day count on a 3-day setup. So you've got a peak formation that starts our day count. And if that's a failed breakout of our opening range and we get a parabolic setup on day 3, Wednesday, for an explosive move, they're going to be going back to target the money on the other side. If it's a trend trade, they're blowing off on day 3 in the direction of the trend. So, you know, you almost can't get it wrong if you are, once you're coiled inside the EMA, you almost can't get it wrong. And so that's the initial positioning for the explosive move. And as we saw, they're not, and then people are going to try and counter trend them, and I'm constantly saying, don't counter trend a day 3 move, because it might not come back. It might be there the entire day. So important. And even if they pull back, see, I'm not in the mindset where I'm trying to sell the high and buy the low. That's not what I want to do, because that's not parabolic. I'm looking at where can size be loaded in, and that's when the other time frames are driving those moves. So you've got to understand that. And then when you understand where you're targeting, okay, you'll understand when the market coils for an explosive move. It's not, you know, we're not trying to guess. We're not trying to, so look at those charts. If you didn't get it and you still don't understand, look at the charts today. And then also look at the timing of how they all played out. First hour, Euro-Yen puts in the low. Last 5 minutes of the hour, it's double zeros. It's coiling sideways. It explodes 50 pips. Once it goes, it's not coming back. Trap volume on day 2, on Tuesday, below Monday's opening range. So we're going to get trades each day, but when you get a day 3, you've got to look at the setup on the day, and then we're targeting a higher low of the week. Today's gold trade, high of the session, low of the week, low of the month. Euro-Yen, low of the session, high of the week, failed breakout on day 2. Little things like that. So as much as people you're asking questions, but you're still not looking at the opening range and the initial balance. It's like, oh, okay, but where's the trade? That's silly. If you understand that, you'll grasp this, you'll nail parabolics every single week. You'll be sitting there like it's like taking candy from the baby. And then people are going, yeah, but how'd you get in? Was it a fast little 1 minute candle? It doesn't matter. Once it's all set up, the 1 minute, the 5 minute, and the 15 minute, usually the hour candle is lined up. That's because other time frames are driving the moves. So if you're not sure, put your hour candle or your 15-minute candle on there, 2 charts. You can see it. You can't counter trend it. Same EMA. Once it blows off, though, okay, like on gold, they might come back to the high of the day. Low of the month, high of the day. You know, but that could be an auction process that lasts the entire 4 more hours. I'm looking for the vertical capitulation or the explosive move. Then we're done and dusted, and we're out of the market. We're on with our day, and it's simple as that. Keep it simple, traders. 1% every single day. Again, Free Cash Wednesday, so the skeptics out there still scratching their heads. It's a trend day, or, well, every single trade is going to be a parabolic trend. Understand that. Every single trade is going to be a parabolic trend trade. Whether it's a reversal, right, in the 3-day cycle, it could be a reversal, but it's going to be a parabolic trend trade in that session. If it's a blow-off move, it's a parabolic trend trade in that session still. Okay? Focus on that. Go back and study those charts. It's every week. Every week. Find the best pairs. But usually if you got a basket, you know, the majors, a couple crosses, you're going to get trades. You're going to get trades. There's 1 or 2 every single week, minimum. But usually there's a handful in a good basket. So get on with your day. Hopefully, I know several traders locked into cash. It's Free Cash Wednesday. And, you know, it's funny. People get annoyed, I think, when I say that. But it seems to be every Wednesday and Friday there's free cash. So sometimes it's, you know, like last Friday. But we had the day 3 longs on Monday morning on several pairs. First red day on Friday on indexes and gold. Set it up for this week. Parabolics on Tuesday. So, which was a 3-day setup from Friday. So parabolic trades. That's where you make your money, traders. Parabolic trades. Have a great day. May the markets go with you.